Let me just tell you something. We get so hype on that music, even though we hear it like, a million times a week. At least I do. I mean, we were hyping away in the 5 minutes. We were waiting for you guys to show up. And by the way, thanks for showing up. There's 138 folks in here already, and we haven't even got started. If you're joining us for the first time, welcome to Stock Watch Sunday. This is Own the Chaos. The stock market is crazy and chaotic. Fat Man and Zoom and I are here to help you own it. If you guys want to subscribe to this channel and get more content related to the stock market and how you can grow in investing, hit that subscribe button, hit that notification bell, hit the thumbs up. And by the way, did you notice the thumbs up isn't blue anymore? Did you get that update?
Oh, no, I did.
Yeah. No. Everybody says make the like button blue, and now it's like, well, now we got to make it black.
All right, here we go.
Weird. But anyways, guys, projected president is Joe Biden, and they gave his victory speech and all that good stuff. The futures are reacting accordingly. Dow was up as much as 300 points already. The Qs are up 154 points. I cannot wait to see what tech looks like in the morning. And the SPY is up 36 points as well. Unbelievable move so far in futures, which makes me super excited for Monday. We're going to talk about some stuff before we get into our top stocks to watch for the week, some things about what to expect. And we kind of already been touching on some of the things as far as what sectors to look at that might be moving tomorrow and throughout the rest of the week. But first, we just want to welcome everybody here. What's up, guys? What's up? Folks over at Twitch, I know. I don't know. I feel like I get ahead of myself. I feel like I get ahead of myself here. But I always talk faster than I'm thinking, or maybe I'm thinking faster than I'm talking. But we got folks over at Twitch. We're simulcasting here on YouTube and on Twitch. So for those of you watching on Twitch, welcome as well. Happy to have you. Batman Zoom, are you as pumped as I am for this week?
I am as pumped, if not more pumped, because I'm about to make this week my B. If you're in the live stream on Friday, members only, I'll be able to curse, but I'm trying not to curse if it's not members only.
I don't know if I can commit to that, but I'll try. Speaking of members only, if you guys are curious as to what we're talking about, if you hit the join button next to subscribe, you can become a Chaos Crew member. We put out a watch list every single day of the week. Also, we have private live streams, which is what Fat Man Zoom is talking about. If you guys want to be a part of that for $4.99 a month, hit that join button, help support the crew, help support the channel, and we'd love to have you guys over there. Yeah, his mic is low. I got you turned up now. See, I forgot to do it, but you're good.
Test. Let's go. Yeah. So the volume, it's really loud. So I am the same volume as the opening music. And so if he puts it on this volume, then it's blasting you guys. So we just need an AV guy. We'll be in studio sooner than later. So that hopefully won't be an issue. But anyways, it's going to be a great week. I'm excited that seemingly the presidential is going a little bit smoother than we may have thought. But I think we should be good. We'll get into sort of the quirks of that. But just to give everybody a setup, welcome to Stock Watch Sunday. We'll sort of talk about the market, the updates. More importantly, we'll get into the top 5 stocks we're watching this week. We got a bunch of earnings plays, and we got one real sexy one we've been waiting for. So number 5 on the Stock Watch Sunday is everybody. If you're a part of the crew, if you got a bear or a bull by your name, you know what I'm talking about. But that's number 5. And then we'll get into the Q&A. So, we'll spend at least half the time really answering your guys' question, what you guys want to talk about on the market. But I expect volatility this week, opportunity this week.
Yeah, man. I mean, and we kind of talked about this as far as an expected Biden win was cannabis stocks, which have earnings this week. Energy stocks as far as solar energy, renewables, and that sort of thing. Housing, which a lot of people might not be looking towards, but housing is definitely going to be on the list of things that move up this week. And a slew of other things. I mean, EVs, I'm sure will go absolutely crazy this week as well. I would like to caution some folks, though, and make sure that you're putting some questions in the chat as far as what you would like to see us kind of go over with earnings, because we're only going over 5 stocks this week that we think might do well in earnings, but there's so many more of them. Earnings season is still not over yet. We still have have a long way to go here before we reach the end of earnings season. But there's plenty of other ones that we could have thrown on this list very easily. So if yours isn't on here, make sure that you're asking it in the chat. But cannabis has got me a little worried because we do have a few of them coming up in earnings that have already made a huge run in anticipation of a Biden win. And I think some of these earnings are going to come out and it's going to shock a lot of people. We have Aurora Cannabis, we have Tilray, Canopy Growth, a lot of them. And I think people were buying these in an expectation of them just kind of going crazy, but we're going to look at earnings here. And I think people are going to be surprised at what kind of debt they actually have and what kind of road some of these cannabis stocks, I should say, not all of them, but some of these have ahead of them. And it's not going to be something that immediately just starts to get legalized and all that good stuff. They have a long road ahead. And so there might be some volatility this coming week because of earnings that come out and kind of like when people start to see these earnings, what the expectation actually is. I think we'll see a lot of profit taking on the cannabis sector. What do you think about that?
That's interesting. I think in general, we'll see some profit taking. So we talked about this where I don't think initially it's going to be as bad as people think, no matter who.
Yeah.
So I think tomorrow could be a good day. At some point during the week or in the next week or two, I think next week, whenever it's definitive, right? So either Trump concedes or if this gets dragged down a little bit longer, I think there'll be a pullback or profit taking simply because what's important is stimulus. We've talked about this time and time again.
Yep.
First thing is presidential elections. That seems to be going well as far as like there's a victor. And then I think everybody's going to be like, okay, great. But like, what about stimulus? And then thinking about there's going to be an impending lockdown here in Maryland beginning next week or so, at the end of this week, actually. We are rolling back to the last phase. So we're at 75% capacity. We're going back to 25%. We're also closing down bars again. So we're going to see more and more of that across the US to a point like there may be another lockdown. So the market again will react to that. So just being cognizant of what's going on, having cash on hand, and being smart how you play these things are going to be important.
I would be interested to see how it looks like if we do see another lockdown, because will it be as sharp of a drop as it was before, considering that we weren't prepared for it necessarily versus now where people already know that how they work remotely and all that good stuff. Be curious to see what kind of drop we actually do see. I definitely think there'll be a drop if that ends up happening again, but I don't know if it'll be quite as shocking, I guess.
No, for sure. I don't think so. I think we see that there's a roadmap, and I think it'll be artificial. Definitely not like it was before. I think it'll be a red day, maybe a couple of red days. But I think it's going to be a great opportunity. And then the stocks we know that are remote plays will keep going. I was just about to say that. Yep. The infrastructure's already built. Right. Everybody's already working from home. So I think it's just the news and the fear. And then that'll quickly subside. Yeah,
I mean, a couple ones just to come to mind. Zoom is the one that we already know that went apeshit, during the lockdown. McCormick, Clorox, all those ones that really kind
Peloton.
Peloton, all those that really made strong moves because of Corona and because of the lockdown are all of a sudden back on the table. And so Zoom's already gotten beat down quite a bit over the last couple of weeks. This might, and it's actually made its way back up over 500. This might be something that actually could potentially propel this as well to maybe closer to $600 a share if we keep trending in this direction as far as COVID cases are concerned. All really great points, all things that we've already kind of talked about, but just wanted to kind of refresh your memory and kind of bring them back to top of mind, because if you're worried about anything, at least now you can go to a direction in the market and create a plan. And that's what we always talk about, is just make sure you have a plan going into whatever it is that you're looking to invest in, whether it goes your way or not, and just kind of react accordingly and not really get caught up in your emotions and that sort of thing. I think it's just really important, even if things start to get volatile, just knowing exactly what move you're going to make, making sure you're a couple steps ahead of everybody else. You'll be just fine. I think that's all I got. Are you ready to get into top stocks?
Let's go.
All right, guys, we have the top stocks to watch this week, and I'm super excited for this week in particular. There is obviously the impending president that will be Joe Biden. And so I think this is going to be a good one. It's going to be a topic of discussion moving forward, not only because of these earnings, but because of what is set to be happening, especially with housing subsidies and everything else. And that is D.R. Horton, ticker symbol DHI. They have earnings that come out, a pre-market on Tuesday, the 10th. Their estimated earnings per share at $1.75. D.R. Horton, if you guys don't know, it's America's largest home builder by market cap. Accounts for 17% of the market share of housing sales, which is crazy. They're huge. This is something that I think that is going to continue to grow here because of those subsidies and because of affordable housing that was part of Joe Biden's plan, that they'll probably, move forward with that to some degree, but also because interest rates are down, that we talked about a lot. Housing has been booming. I mean, houses are barely on the market before they get bought up. We saw that with Zillow's latest earnings about how we've seen demand continue to rise in home sales. Interest rates will remain low, according to the Fed, for the foreseeable future. So I think DHI, D.R. Horton, is primed to do really well this earnings. They crushed earnings last time. Estimated earnings per share here is $1.75. I think they come in at $1.93 and beat.
Ooh. Okay, so check this out. I agree with you on everything you said. We're both really bullish on real estate sector. Man, I have a bigger beat. Last week you were like going bold. I got $2.10, which is incredibly ambitious.
I was going to call over $2, and I was trying to be like not the crazy one, but so I'm glad you did.
Yeah. So last earnings, they beat by 30%. So they came in at $1.72. They had guidance of $1.75. That gives me confidence that they'll beat, and they'll beat hopefully handily, but that would be a record for earnings for them in their public history. So it's ambitious, but I feel good about it. That's how strongly I feel about the industry right now. And I know some people are down on it, but I think over the last couple of weeks, we've seen a lot of industry analysts and experts realize, like, listen, this isn't slowing down like you think it's going to slow down. Maybe a little bit, but it's only going to be slightly. So overall, I feel really good about this company. We have a couple of real estate plays that we really like. I've talked about Simon, ticker symbol O. That's a good REIT if you guys are interested in that. But really anything in the lines of real estate, home building, any of those are going to really do well for the foreseeable future. So that's a good one. The next stock we have is Wix. So that's something that a Chaos Crew member brought on our radar, and we've been watching the past week or so. Wix has earnings on the 12th, so Thursday pre-market. Expected earnings, a loss of 15 cents a share. So here's the thing, Brad. I was trying to think about Wix. And so what Wix is a website builder, and it really targets freelancers, basically the gig economy. So anybody trying to start a side hustle, like Wix is an easy platform to build up. Wix and Squarespace are sort of the top two competitors. And they're built for this. They're virtual. The company's virtual. Any lockdown helps them. And then obviously, like, the gig economy really helps them. I think people being at home, starting their businesses helps them a lot. So Wix is interesting because they missed last earnings, which was surprising. So they had an expected earnings per share of 26 cents. They missed big time. So they missed, 24 cents. They had a loss of 26 cents. So this is really hard for me. With a projection of a loss of 15 cents, they beat. I believe they beat. I don't think they miss again. But I have them. I wanted to make them profitable, and I did. They're going to beat. They're going to be profitable, 5 cents. I expect them to give good forward guidance. This stock should do well. So really like Wix. I like their model, and I think for the coming months, next couple quarters, they should be in a really good spot.
Yeah, I think so too. I mean, we've talked about this before, especially when it comes to Amazon, when it comes to Etsy, Wayfair. All of those companies are really supported in large part by people who are trying to build their own small businesses through e-commerce. And we saw a really huge increase in Etsy sales. We saw a huge increase in Wayfair. We just had Wayfair earnings last week, and they absolutely knocked it out of the park. Lots of those companies, a lot of those people that are working for themselves, create their own website that then drives them to whatever platform they're selling their goods on. So I think that Wix is definitely poised here to do really well. You're looking at the chart here. I mean, there's a clear support on the daily at 240. It's made its way all the way up to 286. Obviously, on some really high expectations as far as a new president's concerned. We have a resistance all the way up here at $300 a share. I think that's going to be really key for Wix. So keeping an eye on this. If by some chance it does miss earnings, I don't expect this to go below that 240 mark. And if it does break or beat earnings, I think we see this have a monstrous Wayfair-like move. Now, just to give you guys perspective, Wayfair did move downwards right after earnings, but then had a monster move right back up over to $300, over $300 a share. So I think that Wayfair and Wix, I think we could see a similar move if you just go ahead and look at their chart as well. Like them a lot. I think they come in at 3 cents a share. So I think they actually come in and be profitable. So that's kind of my expectations on that. Next, we have Disney, and this is going to be a really exciting one for me, I think. There's been a lot of doom and gloom as far as Disney's concerned with the parks. But the one thing that's been keeping Disney afloat it has been Disney Plus with their acquisition of 21st Century Fox, Hulu. They have as of the beginning of August, over 60 million subscribers to Disney Plus. That's about a quarter to a third of what Netflix actually has worldwide. I think that just keep in mind too, Disney Plus has only been around. They only launched it almost a year ago to date. So I think that Disney kind of, you add the parks side of it. Obviously we've seen shutdowns in France again and all that good stuff. They did lay off 28,000 employees, which isn't good, but it actually helps their bottom line so that they can continue to do the things that they want to do. I'm sure they will rehire all those folks back too. But I think that when you take Disney Plus and how they've been able to move the needle as far as that's concerned. I mean, you look at the market cap of Netflix, 227 billion. You look at the market cap of Disney, it's 230, and Disney's gaining ground in this market. I don't know how we don't see them beat earnings yet again. The estimates were a loss of 64 cents, and 8 cents was the actual. I actually don't know what I don't know what I'm going to do with these earnings. I actually kind of wanted to call another expert, if you don't mind. I'm going to phone a friend.
Oh, here we go.
So
this should be fun.
So we're going to phone a friend. I know somebody who's been.
Please enjoy this Verizon ringback.
Know somebody who's been going to Disney World for the last 20 years. I don't know. We'll see if she picks up.
Hello.
Ma.
Hello.
Ma.
Yeah.
You're
gotcha.
you're on the air.
Hey, Ma.
Oh. Hey, Brad.
That was Christian. That's Fat Man.
Oh.
No,
Okay,
it's me, Brad.
Hey, it all sounds the same.
Listen. Hey.
Yeah.
So we're talking about Disney, and I have no idea what earnings are going to be like. Listen, you were just down there, right? How bad was it?
Oh my gosh, it was like a ghost town. Like I literally brought me to tears. I mean, you know that we go once or twice a year for the past 20 years. I've never seen anything like it. It was, parks are empty. The resorts, there was nobody at the resort. Staff was like not to be found. They had like one person running like the cafeteria kind of restaurants.
Yeah.
What we call the walk-up windows or whatever. They would only have one person running those. We actually are friends with a really good chef down there that was part of the layoff. So
yeah, that's pretty tough stuff. And I remember you talking to me about that. But honestly, I mean, you look at this, and from an investor standpoint, you probably see Disney coming back from this, right? I mean, you're looking at Disney Plus. I mean, do you use Disney Plus at all yet?
I do use Disney Plus, and as you know, I'm a DVC member, which for anybody who doesn't know that, I'm a Vacation Club member, and we get the behind the scenes or whatever you want to call it, the scoop before everybody else does. Even with all the things, the regulations with shutting down, what they're shutting down next, what they're opening up next, that kind of thing. Disney will definitely bounce back. We're being assured of that based on our annual dues and things like that. So, but yeah, I mean, it looks bad now, but they're not going anywhere.
Yep, I don't think so either. So last time they had a loss, or they had an expected loss of 64 cents earnings per share, and I'm leaving it to you to guess what the earnings per share are going to come in. Last quarter they actually came in positive, despite what expectations were. This time it's a loss of 71 cents, and instead of me guessing what the earnings are going to be, I'm going to leave it all to you. So what do you have the earnings per share coming in at?
Oh my gosh, I'm going to say, okay, this pressure I can't even handle. I just got out of the kitchen. Making chicken pot pies, just so you know. I'm going to say, don't laugh at me. You're going to appreciate these. I have mastered that recipe right now.
All right.
53 cents. That's what I'm going to say.
53 cents positive? Woo!
I'm going to say yeah, because,
right.
yeah, look. I mean, you know this more than I do, but
in that chicken pot pies.
All right, Mom. All right. Well, thanks. Mom says 53 cents. Let's give Mom a round of applause. Thanks I appreciate that. We put you on the spot. So thank you so much.
Yeah.
Get back to your chicken pot pies.
Hey, you're going to love this at Thanksgiving. Trust me.
Yeah.
I will. So.
All right. Hey,
all right.
I love you, Mom.
I love you too.
Bye.
Bye.
There you have it. 53 cents a share from Brad.
Who's cracking them chicken pot pies? I'm not touching them.
So what do you got, Fat Man? What do you got?
Man, if it's 53 cents, it's going to be crazy. This whole time, I was like questioning my numbers, but I vow not to change my numbers. I come in at profitable 1 cent. I'm not confident about the response afterwards. I think they beat. I don't feel confident about 1 cent. I think it actually could. I feel like it's going to be in the negative, but I'm sticking to my number. Here's the thing. Long term, they will be fine. I'm interested to see the numbers for Mulan. I don't have a great feeling about that. And I don't know how the numbers have slowed. So if we look at Netflix, numbers slowed drastically as far as new subscriptions. So I expect I don't think it's going to be as bad, but I expect it to be a little bit of a down quarter. If they give guidance, will be good. But there's a lot of headwinds. So it's kind of like back and forth. Overall, they'll be fine long term. If I was in this, which I haven't in my long term, I'm not touching it. But if I was in this swing trading it, I think I'd play the run up and I'd definitely shave a little bit off, if not totally get out of it, because I think there's going to be a really good entry opportunity afterwards regardless.
Yeah, I mean, look, here's the thing, guys. With Disney, even if they come in and miss, look for areas that this probably would be coming down to for an area for a bounce. I personally like this around $120 a share if this actually comes all the way down that far on an earnings miss. Mom, I love you, but 53 cents ain't happening. I'm going to say they come in at around 7 cents per share. Is this what the earnings per share are? But we'll keep Mom's on the books. Listen, maybe she's surprised. Maybe she's closer than all of us. We'll see. But there's Disney. What do we got next on the list?
All right. So what was supposed to be number 3, but we'll make it number 4 is Palantir. Thursday after hours, 3 cents a share. 2 cents. I think you had 2 cents somewhere around there. Yeah. So let's just say 2 cents a share. Palantir is interesting. A lot of people, this is a recent IPO. Yep. I mean, it's a business that's been in existence. It IPO'd in September. I like it a lot. I've stayed away from it, just being an IPO and the volatility of it. Typically, I wait to see the first quarter of earnings. I expect there to be profit taking. There's no doubt in my mind there'll be profit taking.
Yeah.
But and the reason why I say this is they've already given their guidance, which looks really good. I mean, they're going to beat. They've given their guidance for 2021, and so that should already be built in. The only thing that'll really change is if they increase their guidance. I don't see them doing that with a new president, with a lot of uncertainty about what's going to happen. There is no conceivable reason for a company to increase their guidance.
Yeah.
They'd rather keep their guidance and outperform.
Right.
So it's highly unlikely. I think it's going to be a great earnings for them, but I don't think that it'll be material in how it moves the stock short term. Long term will be good. And just to give you guys, I pulled up so what's really important about Palantir I think, is the defense sector exposure.
Yeah.
Now, people could argue that with Democratic win that Biden, it would hurt the stock. They're going to spend no matter what. Maybe it wouldn't have been as much, but they're going to spend. They're going to continue to spend. I'm not worried about that. I think that's what I get excited about when thinking about Palantir. And I apologize. I just said all that stuff. They didn't give their guidance for 2021. I was thinking about Workhorse. My apology.
No, that's all good.
So anyways, with that being said, Palantir's defense exposure, I think they beat, and my number that I have for them, let me pull up, is 4 cents a share, slight beat. I'm looking for a buying opportunity, but I can't buy at these levels, Brad.
Yeah, I'm right there with you. For me, I actually just had them coming in and meeting expectations because I really don't know what the expectations are going to be for this yet. I do have a lot of faith in Palantir from a long-term perspective, and we've talked about this with the Chaos Crew folks, which, by the way, if you're just joining us, if you want to hit the join button and get access to the Chaos Crew where we talk about these things a little bit more in depth, then come on over. It's $4.99 a month. You can't beat it. But with Palantir, we talked about this being a solid buy under $10 a share. It's now gone up over $14 a share after hours on Friday. And I'm with you. I don't think that this would be something that I would be chasing all the way up here. Maybe wait to see what earnings do and what their outlooks are, and that way it can kind of give us a better snapshot of what to look like and what to look forward to in the future. Maybe there'll be other buying opportunities. I just don't think with the crazy moves we've seen over this in the last week, just looking at this daily chart, I mean, it was down in $8.90 2 weeks ago, then almost doubled on Friday. So I think that this is going to be another really good opportunity as far as an investment's concerned from the long-term side of things. But I would be waiting on this as well.
Hey, sorry, this is why we're live. We get to fix these things.
Yeah.
I was right. All right. So I wanted to give those numbers. Sorry, I'm like pulling up multiple screens here.
That's all right.
So they did forecast 2021. They predicted growth. They have monster growth that's expected. So third quarter, they expect growth of 50%. Yeah. And this year should be over $1 billion, which is year-over-year increase of 40%. And then they did forecast next year, which is 30% growth, which I expect them to exceed. But again, I don't think they'll increase. So I just wanted to clarify that because originally it was correct. So we'll see what happens.
Appreciate that. So by the way, there's 519 folks in here and there's only 122 likes. If we get those up, certainly would appreciate it. Help support the channel a little bit more. If we could get the thumbs up before we get to number 5, which is our favorite stock recently. Maybe after on Tuesday, it might be our favorite stock ever. We'll have to wait and see. But it is Rocket after all. Finally, we have earnings coming out for Rocket Tuesday after hours on November 10th. Estimated earnings per share at $1.09. If you guys don't know what's been going on in the housing market, I don't know where you've been. You haven't been on this channel. We've been talking about Rocket for a while now, ever since their IPO. And, we love this stock. We can't say more about it. Rocket is going to be interesting. I think they come in. I'm just going to preliminarily give my estimates here at $1.45. So $1.09 estimated, $1.45 is what I think is going to come in at. And the thing is, for the demand for mortgages are just unbelievable right now. Not even just from a standpoint of people just wanting to find homes, but like, it's interesting because we talk about remote work and we talk about the pandemic and everything else. This isn't just about going out and buying a new home. This is buying a new home and doing it safely. So when they go and use Rocket, you can do so all online. You don't have to worry about being in contact with anybody. You don't have to go to a major bank, all that good stuff. We just love Rocket so much and for a lot of these reasons. And I think they absolutely blow this out of the water. I think this is something that you don't just buy and hold for these earnings, but you buy and hold for a long time to come because Rocket, in my opinion, is poised to do extremely well. It's only $3 off from where it IPO'd at, and I think it is really undervalued at this point.
Absolutely undervalued. I have them monster beating, surprise, $2.10.
Damn.
Book it, baby. Book it. I'm telling you, I've been waiting for this day for so long, and we're so close. I can smell it, people. So join me on Tuesday because I am going to be there. Listen, this day, Brad, will define me as a human being. Either I go down in flames or I shoot to the heavens. But I imagine how this doesn't do really, really well. Now, my number is pretty ambitious, but I feel good about it. I do think there's going to be a run up. I'm not saying that this is going to blast off right after earnings because it's typically pretty volatile. I could see this coming down to $20. But like I said, no matter which way it goes, if it gets above that 25, I expect it to run. If it goes down to 18, I'm dollar costing. If that goes under 20, I'm not going to do anything different unless they tell me something different about their business.
Yeah.
Think about this. They benefit if people foreclose on their houses because that's contracts for them. They benefit for refi, so the rates keep getting lower. People are going to continue to refi. They benefit for the lockdown because if you're at home and you're working from home and you don't have an office, you're going to get a bigger house. You're going to get a bigger place, right? So everybody's upsizing, if that's even a word. And so
Upgrading.
all these things play into what benefits Rocket.
Yeah.
So I don't know what hurts them other than the time of year, but that should already be baked in. I feel good about Rocket. You got Chaos Crew. You know what's up. You know what time it is. I don't have to say a word. I'm going to be dancing on graves, baby.
I have, one other thing that just got us excited about this even more was Zillow's earnings last week. And one thing one big key takeaway for me was the CEO came out and said, the longer the pandemic goes on, the more everyone is rethinking where they live, how they live, and who they live with. He said, our conviction is rising that these are not temporal trends, meaning that this isn't going to be temporary. We've talked about this from, I don't know, almost since day one of the pandemic, when everybody was starting to work remotely, about how Goldman Sachs, 97% of their employees were working and being just as efficient, if not more efficient and more happy working from home than having to commute to work and everything else. And so to your point, and to, just to the point of what the CEO of Zillow was making, was that not only are you looking for a larger house for maybe your at-home office, but let's just say that you are going to be home more and you just want more space to get to move around in. I mean, if you're stuck with your family, you're hanging out all the time, you might want some more space to kind of separate yourself to get that alone time. That man cave is about to get a little bit bigger, I'm guessing. So, I think with what Zillow has kind of forecasted as far as the industry is concerned, it only benefits Rocket here. And I think that a lot of you guys responded last week as far as how many of you have already used Rocket, not only just for buying a new home, but also refinancing as well, which we haven't talked a whole lot about, but the refinancing side of things too is also a huge revenue driver for Rocket. So we love it a lot. We can't say enough good things about it. And we think that they beat very handily, and it is very much a buy and hold for a long time to come. And that is our top five stocks for this week to watch. Fat Man Zoom.
Yeah, and if you guys want to check us out, we're going to be looking at the earnings after hours on Tuesday. We go live every Tuesday, Thursday at 2 o'clock. We're going to stay on through the close, through earnings to give our earnings reaction. Tuesday will be good. We'll also be live Thursday, but Tuesday's the day. Lynn's photo. I don't know if you're trolling me here. It says earnings date is November 9th for Rocket on Yahoo Finance. It is November 10th, 100%. So it's November 10th. I don't know what you're trying to do to me, but I think you're trying to play me is what I did on Eli.
Weeble sent me a notification that it's on the 10th, so I'm going to trust Weeble on that.
All right. So first things first, we got through all this stuff. I want to go through a couple of Rocket questions, and then we can get in general Q&A and any sort of housekeeping you want to do.
Sure.
I will talk about NATO. I'll talk about Workhorse. But as far as Rocket's concerned, somebody asked if you would buy Rocket at they're breaking even as at $22. Should you sell? I want your answer on that. But first, I want to make a general comment, which is interesting. We talk a lot about scaling strategy, buying a stock, and having some money on hand to dollar cost average. So if you don't know what dollar cost average is basically if let's say you have $1,000 and you buy half of that amount in stock. So you buy $500 worth of shares and you get it at $20. If you then buy the next $500 after the stock goes down, your average price on the stock's going down. So if you buy it for $20 for the first 500 shares, $500 worth of shares, and then you buy it at $19 for $500 worth of shares. Your average price is $19.50. So dollar cost average is basically just over time, you taking all the prices you entered in on and taking the average of that. So theoretically, if the stock goes down, you can get it at a discount if it goes back up. Yep. So the reason why I'm saying this is it's interesting because we buy a stock at $22 and it goes down. And then when it comes back up, you're a break even. You're like, should I sell it? And I'm not picking on this person because I think I do this. I think a lot of people do this.
Yeah, absolutely.
If it was a buy then, why sell it then? Unless there's a reasonable resistance. But if you bought it there, I'd imagine that there's a reason you bought it there, and don't fear that it's going to go down again.
Right.
And if you've done your job, you should be dollar costing. So you should have a better average. So all I'll say is, if you felt good about it at 22 and it's coming back up, I wouldn't be so quick to sell it. Set a stop if you want to do that. But I think that, like you said, what the resistance was at like 24. So I think you should be okay. So anyways, the question is, should you sell at $22 at break even?
For me, I wouldn't. I mean, I think that we made it pretty clear as far as how we feel about the company itself. But really, 24 has been that resistance for Rocket. And, I really want to see it get above that number. I think that even if we get it above that number before earnings, that would be awesome. I think we could see a huge run if it breaks over $24 a share before earnings. But even if it doesn't do that, anything under $24 a share, to me, in my opinion, is a steal. So if you can get underneath of that point and just hang on to it, I think that you're going to be in good shape. And that's just my own opinions about it, my convictions on Rocket itself.
All right. So welcome to the crew. We had 2 crew members. Unfortunately, we didn't get an opportunity to call them out, but we had 2 crew members join. If you guys are interested in the Chaos Crew, you can click the join button next to subscribe. Pay $5 a month. You get a daily watch list from Brad every morning, 5 stocks he's watching. You also get access to the members chat and a private live stream we do every Friday where you can ask any question of us and you have our undivided attention. So Chaos Crew, it's worth the money, people. I ain't gonna lie to you.
You also get access to, if you're in the Chaos Crew, you also get access to our public Webull portfolio as well. You get the daily updates on that, what changes we're making, what we're looking at, all that good stuff. So if you want to see that, the portfolio has been beating the market. It's beating the market right now. It's looking really good. So if you guys want to do that, head on over to the Chaos Crew. I saw a couple of people saying they couldn't see the join button. That's okay. Hit there's links in the description for the Chaos Crew as well. So I have an actual URL for it that you can go into the description and look for it if you can't find the join button. So if you find the join button, great. If not, the link is in the description too.
All right. First question, Jonathan Schreiber. Hey, on the Chaos Dudes, can you guys show the newbies a quick tutorial on how to look at a balance sheet via Yahoo?
Via Yahoo? I mean, I know how to look at a balance sheet via the SEC. Let me see here. Let's see.
Yahoo Finance, I think, has a pretty straightforward.
Let's see. I don't know where to go on Yahoo as far as that's concerned. I mean, I know how to look. We'll make a video of that instead of doing it in the live stream. We'll make a pre-recorded video for that and we'll put it up. How about that? Because I'd rather look at a SEC filing than try to figure out what it looks like on Yahoo and waste everybody's time. But yeah, it's a great question, and we'll keep that as an idea to create for future videos. So thanks so much for the suggestion.
Right, next question is Toy Buoy. You guys think we should have good opportunities to take Amazon this week, and at what price?
Amazon. Let's go ahead and bring us back to Webull, and I'll bring up Amazon. So right now, it actually ended the day red on Friday. I think that there's potential for a good dip opportunity if by some chance this gets back under $3,300. If it does, look for it to come back down to maybe around $3,250, $3,240 in that area. We always say this about Amazon, though. It's a buy no matter what. Wherever you end up getting it at, we think it's a buy. And then if it ends up dipping down to prices that make no sense, then it's a buy then too. So I don't know if I would worry too much about where Amazon's going, because really, as far as Fat Man Zoom and I are concerned, it's only going up.
Yeah, absolutely. Next question we have is, Ryan, I think you know what? What's your game plan for Rocket, Brad?
Real quick, Steve and Alex, welcome to the Chaos Crew. Thanks for joining and supporting the channel. But my plan for Rocket, I really want to see it get up over $24 a share. If it does that, then I may consider probably trying to start protecting my capital a little bit. What I mean by that is the amount of money that I put into Rocket, I may start scaling out of and starting to play with house money at that point. So lots of times I try to wait till I can at least double my money. I think that Rocket has the ability to do that. So I may have to make a decision, try to figure out what I want to do once it gets past over that, or it breaks over that $24 hump. So if we go back and look at Rocket's chart here, this is what I mean by this. So if we come back and look at the daily, you look at Rocket and you can see this line that I have drawn represented here at $24 a share. That represents the resistance. So once it breaks over that, my average here is around 21.30. So pretty much right where it closed at on Friday is what my average is on this. If it gets up over $24 a share, that's when I'm going to start thinking about scaling out and trying to protect some of that capital that I have. So I always try to take the money out of stocks that I put into them. If I do see a monster run out of them. And that's always kind of been my game plan for a lot of these. I don't ever go into something expecting everything to double. But when I look at something like Rocket that I have a lot of really strong conviction on that I think that could end up doubling my position, then that's when I'm starting to think about, okay, at what point do I start to actually protect my capital? And I think that if this starts to move up above $24, $25 a share, I think that's when I'll start to make that decision.
Alex K, welcome to the crew. Stephen and Messi, upgrade to level 2. Thank you, brother. Yeah, so for myself, I'm full position size in Rocket. Yeah, I'm in the same boat. So if it runs up, I'll trim some. I'm definitely holding at least half over earnings, if not more. But I'm going to trim some. But I'm willing to take the bet and even hold on, and I'm going to add it back in after earnings. I'm going to wait maybe a day or two to see how it plays out. And so, like I said, if it goes down, I'm just going to dollar cost unless there's something in the earnings they say differently. So that's Rocket. Next question we have Taylor Johns. Happy Sunday, guys. Have you guys looked into ELY Top Golf deal? ELY seems to have quite a bit of debt, but the growth of Top Golf has huge upside and a great marketing opportunity.
You know what?
I think this is a serious question.
You're thinking. I like the way that you're thinking, my friend. If this is a serious question, then just to let you know, this is something that we ended up accidentally buying in anticipation of earnings that we thought was going to happen 2 weeks ago. We think that there's going to be earnings on Callaway this week. I think what's the consensus now?
100%.
Is it Tuesday?
I think it's Tuesday.
So Tuesday they have earnings. We think that this acquisition of Topgolf, even though they spent a lot of money on it, is going to pay off in the end. And we think that the business model that Topgolf has is going to be a fruitful one. I mean, even when you think about it, even with the Rona kind of really sweeping back over the country and the world, golf in general is the perfect social distancing kind of activity. You don't have to be close to one another. You can just go out and be outside. So not only was a Topgolf acquisition or acquiring the rest of Topgolf was a great idea, we just think Callaway in general is a great idea because of that fact. And we think that they're actually going to probably beat earnings. And I think that we were joking around about maybe selling Callaway going into earnings. I think that they could potentially be a good long-term hold as well. My only concern about this is that, we're getting into the winter months, so we might see a bit of a slowdown, and that's just more of a cyclical thing. But I think Callaway is actually going to crush it. I think they'll do well in earnings. I think that the acquisition is a great idea. We love the stock.
Yeah. Actually, it's Monday after hours. Okay. We may have to do a live stream just for that. It's such a big deal.
I know.
We got to be all there together.
Yeah.
And we predicted 34 cents a share, and I think you predicted 33. We basically said a slight beat.
Yeah.
But I think it's just because we just have no freaking clue.
It really is kind of a shot in the dark, it seems like. But we think that just the demand here for golf in general is really what's going to continue to propel Callaway. And the drop-off is really what we were playing, because we thought that while most investors were thinking acquiring Topgolf was a bad thing, we saw it as a good thing. And so that's why we decided to get into the $15 range. And we've been blasting it out to our Chaos Crew folks as well. We think it's a great buy. Even at $17 a share. I mean, it still has yet to close this gap all the way up at 20 something. So
I feel like we should set a goal for likes. If we hit likes, we can go live tomorrow.
Well, how many likes do we have right now?
Are we at 600 people yet?
Oh yeah, we're at 574 right now.
Okay.
We're at 574. We have 208 likes. If we get
300.
we're at 300 likes.
No, if we get, we need over 50%.
Okay,
for
yeah.
sure.
Okay, yeah. So 300 likes, we'll go live on Monday. How about that for earnings for Callaway? I'm gonna laugh my ass off if we show up and they don't have earnings after hours on Monday.
No, they will. They will. I'm looking right at their investor relations page. All right, Melissa Moffett, what's going on, Melissa? Hi,
What up,
Brad
Melissa?
and Zoom. Did you guys see Trade Desk earnings? It's over $820.
Oh my God!
Maybe
I
talk
know.
a little bit about this stock. Can it go further? What are your thoughts?
Trade Desk is a freaking monster. We said that we liked this stock before earnings, and we thought that it was going to do really well. I didn't think it was going to do this well. This is insane. I wouldn't be buying it all the way up here. I think, Melissa, if I'm not mistaken, you've actually been in this one for a little bit. So if you haven't trimmed off anything, I would probably encourage some kind of selling at some point, because for me personally, I wouldn't want to be holding on to something like this and watch all of my profits slip away. Not saying that that's what will happen, but the monster move that Trade Desk had happened to them on earnings. Not only just that, but the days prior, this was gapping up every single day with the market. And then you had just this monster move after earnings. So for me personally, I think this is going to be something that I would want to try to lock in some sort of profit on. Maybe not sell it all, because I think Trade Desk still has a really bright future ahead of them and they're going to continue to knock it out of the park. But take something off the table. I mean, you can always average back in if it pulls back, which I think it likely will.
Flyers HC, what do you guys think of Mattel? There's a new CEO since 2018. He's got him going in the right direction. Christmas is coming.
That's a great question. So I think they had really good earnings last time around, if I'm not mistaken. Yeah, this is what caused this huge gap up, and it really has held well since their last earnings. Going into the holiday season, I think, and I've been saying this for the last couple of months, really since August, that I think that this holiday season is probably going to be one of the biggest holiday seasons we've seen in the retail space. Mattel definitely primed for that. I think they'll end up doing really well too. We go back and look at this after their earnings knocking it out of the park. You're right, they do have a CEO, a really good CEO now. We're right at that point where we were before the crash. So I think that this has the opportunity to propel itself up above that. If we can get up above $14.88, maybe even $15 a share, we should see a really nice continuation. I think Mattel is definitely primed for it going into the holiday season for sure.
You know what's interesting? I'm going to make a prediction that maybe people aren't thinking about. I agree with you as far as one of the record-setting holiday seasons. The reason why, I believe, is I think there's going to be a lot of extra money from not being spent on traveling, and you're not going to be seeing some people. So like, I feel like there's going to be more gift buying.
Yeah.
So,
well, also this, I mean, if you're not going out and spending money out on hospitality, or eating out, you're probably saving a lot of money too. I mean, I'm sure obviously there's a lot of people that are out of work, and so that's obviously a huge problem, but I think there's also a large majority of people who aren't going out that are still able to work from home and that sort of thing, that can keep their job or have been able to keep their job, and they got money to spend. I mean, I think.
Yeah, and we know about Americans is they don't save money well. So if they have extra money, they'll spend it.
That's 100% true.
They'll find a way to live paycheck to paycheck. All right, next question. Be kind. BYND has earnings also. I see a big beat with them. Your thoughts?
They do have really good earnings. The thing that BYND has been struggling with is that they have yet to have really brought down their faux meat products to compete with actual meat products. So it's really expensive to actually go out and eat Beyond Meat products. So I think that what we're going to look forward to for Beyond Meat in this upcoming earnings report is, are they able to cut down costs as far as the actual product itself is concerned? Now, most people who eat vegan or practice veganism, I think that it doesn't really matter a whole lot to them. But if you're on the fence about it, right? If you're somebody who maybe sees the health benefits of just eating plant-based products, that sort of thing, but it just costs too much. I think that if Beyond Meat starts to bring that cost down, then we could see a really nice move on them. They're starting to trend in the right direction is what I will say. They had a really tough last couple of weeks. We'll see what these earnings look like. I think they probably do beat as well. But I really want to see this on this report if they've been able to bring their products and the cost of their products down.
They're down nearly 20% the last month. They are up almost 100% year to date.
Yeah.
But I think there's room for this. I think they beat. I think they show profitability. Their estimate, they report tomorrow, so their estimate's 5 cents a share. I think they beat this easily. Their last earnings got hammered from a profitability perspective, as you mentioned, and they lost money and they had negative net income. I don't think that's the case. I think they, I think they beat, and I actually think they have a run up, a nice run after it towards the end of the year.
Yeah.
I think they go to 200 by the end of the year.
Yeah, I mean, I think that's a real possibility. I mean, we haven't seen those kind of numbers since their IPO when it went ballistic before the lockup period ended, and then the lockup period ended and it got ugly. But since then, it's made some really good moves.
Yeah, and this is one that it's going to continue to be choppy. So if it moves up, don't be afraid to take profits because there's going to be other opportunities to get in. Look for, look for people trying to an uptick for people just eating healthier because everybody's gaining weight and the COVID-19. No, 19 is the amount of pounds that they've added since they've been at home. And also just willing to cook at home, maybe maybe willing to pay a premium. But I agree with you, over the long term, that's not sustainable. They got to get those costs a little bit down. But more importantly, more SKUs, that's important, and more stores, more places carrying them. So apparently that's in the talk. So if there's more places, which means more sales, that's all good stuff. So good stuff on the horizons for BYND, but certainly is going to be a little choppy.
Hey, real quick, can I interrupt you? So I saw Ema ask this question on Friday, and I want to make sure I got to it because I saw him ask it again in the chat. So I'm going to jump in line here with Ema. But he was asking about EAST. Eastside Distilling is it's a penny stock right now. This definitely could have some movement to it, Ema, and I like the way you're thinking. Just be cautious with this because they do have a lot of debt. I did get a chance to take a look at this one, but they're trending in the right direction, and we all know what demand for alcohol has been like, and so I'm not going to sit here and say that this shouldn't be a buy for you, but I do like the way that this is trending in the right direction, and I do like the way that they are looking to try to eliminate a lot of that debt. This could be a really good early one to invest in, but just consider the risk here. There's still a lot that's as far as risk is concerned. I could see something like Eastside actually getting bought up at some point, by a Brown Forman or somebody like that. They actually have a really good foundation, and I think that this is the best time for a company like Eastside to be in business because of the demand that we've seen in alcoholic beverages across the board. So this one, in my opinion, it is at $1.39. So consider the risk. There's a reason it's a penny stock, but I think that this one definitely has potential to do really, really well.
All right. Next question, Nato Horasi asking about Workhorse. Thoughts on Workhorse? What are your opinions on it?
I think there's just a lot of uncertainty with it still. I mean, we still are waiting on this USPS deal to go through. I will say that with the president-elect here coming into January, this could be something that actually gets a really strong move on. And we'll probably see a strong move from a lot of the EV stocks as well in general. Just don't plan on this being a sustainable move if you see that. And it's kind of what I was talking about in the beginning of the show as far as weed stocks were concerned. I think we see a nice little pop because of the anticipation of what could come, but we still have a long road to go before anything actually gets any kind of serious movement or we start to see serious change in advancements in this kind of space along with weed stocks and stuff like that.
Yeah, I really like Workhorse. Maybe there's I'm interested to see how it responds because there was such a push for Trump. And if Trump didn't win, does that hurt the stock short term? They're the leader in their space. And the last mile delivery is really important. It's not going anywhere. I think it's going to do really well. I like this stock. Technically, I think it's in a really good spot and it's worth sort of taking the plunge in. And I think they have a really good chance of getting this deal. Yeah. And so that had nothing to do with Donald Trump. The contract was put out anyways.
Right.
So it's really a three company race. One company's based in Turkey. I cannot imagine that they'll go with an international company. I just don't see that happening.
Yeah.
So I think it's down to Workhorse and another company called Oshkosh. Not the kids' clothing company.
I was going to say,
the
what?
truck maker. Yeah. Now, here's the interesting thing. Workhorse. So I like Workhorse's chances. I think they're worth a play. But if they don't get that contract, it's going to hurt the stock. It's going to be a hit. But I think it's worth the risk. Now, as a hedge, I would get Ford because Ford is invested in Oshkosh. Ford just missed earnings. Ford went down. It's under $10, right, Brad? So like, isn't it like 7 or something crazy?
Ford actually beat earnings last time around, if I recall. But
I thought, but they went down, didn't they?
yeah, so their sales were actually down in general, but they actually did end up beating earnings. Yeah, so it did come down from around $8.22, now sitting at $7.79. So this definitely could be something. GM and Ford, all the other ones are trying to catch up to Tesla, and that's really what it is at this point. So they're trying to scoop up some of these tinier companies, and maybe that is a road. I mean, shoot, who knows? Maybe we do start to see some sort of merging, or some of the big three coming in and kind of scooping up more of these smaller companies to try to get all the technology they can to somehow try to catch up with Tesla in this space.
Yeah, and that's what I want to make clear is this is the contract play. So
yeah,
I think Ford is a great opportunity in that, and it's actually different than Tesla. The only thing the same is EV. What they're competing for is very different right now. So
right.
If you're interested in Workhorse, I think it's in a good spot. If you want to look at something else as far as that contract play or want to hedge, I think Ford's the play there.
Gus gave us a $20 donation. Thanks, Gus. He says, I gave you a like in cash.
Thanks,
Get off
brother.
my back. You guys are honestly awesome. Yeah, thanks for the like, man. Appreciate it. And thanks for the $20 donation. Thanks a lot.
Bonjour, Karim. It seems Zoom is going out of reach. Is there any chance to catch on a dip before earnings?
Zoom. When is their earnings? We still have a ways for earnings, I think.
Yeah,
Until
I think
December.
I think it's the end of, I think it's like December 4th.
Yeah. Okay. So yeah, I think Zoom's still going to continue to move. I mean, we just talked about it, about how we're seeing increased coronavirus cases, and this is the stock to be in. If you're seeing, folks getting locked down, we're going to continue to see more active users out of Zoom. I think going into the colder months, I think absolutely, in my opinion, $600 is around the corner for Zoom.
Yeah. Is there going to be an opportunity to grab on a dip? Yes. Will it be at 500? I don't know.
Yeah.
But Zoom has shown volatility. Keep in mind, so Biden will get, I think inauguration day, it's like, what is it, the 20th or January, right around
19th,
the January
yeah.
20th. So with that being said, there's going to be some choppiness between now and then. And so that means that a lot of people are going to show fear for the lockdown, the impending lockdown. So depending on the news we hear, the Zoom's going to move in that. Now, the second lockdown may cause a pullback, but what we've seen is stocks like Zoom are going to benefit from this. And once it happens, especially when the lockdown's in effect, I think the move will already been, the price would be baked in.
Yep.
So I think it'd be okay to get in. So there's going to be multiple opportunities to get in there. Just don't know if it's going to be at $500. You may look back and say $500 was a steal.
Yeah. I mean, we talked about this, with a couple of stocks that we haven't mentioned that also thrived very heavily in the first kind of initial shock of coronavirus was Walmart, Facebook, Google, all the other FANG stocks that did really well. So I think that not only Zoom, I mean, to be quite honest with you, just kind of behind the scenes saying, I'm using Zoom right now. Fat Man Zoom's on Zoom.
When he won, everybody in the background was on Zoom.
Yeah, right. Exactly. So, I mean, it's just going to continue to do really, really well. And even if you feel like $500 is a bit high for you to get in, I don't think that you're going to be upset about the fact that you might have gotten in a little bit higher than you wanted to, because I think you're going to be green no matter what.
So let me speak on it being too high. I understand there's many stocks that could potentially be too high. What I do want to point out for Zoom specifically that I think is a bit different is Zoom ran up off of over 300% growth last earnings.
Yeah.
Okay. So that basically means that it was essentially 10 years. I mean, on the low end, 5 years, it had growth. It had growth of like that growth would have been projected out 5 to 10 years based on 30 to 50% annualized growth.
Yeah.
So basically, what you have to ask yourself is like, if there hadn't been a lockdown, if there hadn't been COVID, what the stock would have been in 10 years or what the stock would have been in 5 years. Would 500 still been a lot then? I think the answer is no. So this one's a little different because there was a material reason this thing moved. It's growing massively internationally. It's growing massively domestically.
Yep.
It's insane, the growth here. And we said this last earnings, it hasn't even tapped into education or healthcare, which it hasn't monetized because they're giving it away because of the lockdown. So imagine when they monetize it, massive growth. I just don't believe that $500 is cheap for Zoom.
Yeah, definitely not the ceiling there. And we are just about out of time. You got one more for me?
No, I have 2 more.
Okay.
NLS has earnings Monday. Nautilus would be a good time for airlines. LUV Delta.
Are you asking about Nautilus or Delta?
That the question says Nautilus would now be a good time for airlines.
I don't know.
Eric asked us for Nautilus, so we've already answered that question.
Yeah.
So like, just talk about airlines in general.
I think airlines are going to probably take another dip here because of the increase in cases. But we've talked about this a lot. Our favorite airline is going to be Southwest. If I'm looking at Southwest right now, look for this to maybe come back down to around $35 a share. I think it'll be a tough time for them, even through the holiday season, which is probably one of their biggest moneymaker times of the year for airlines. But we like Southwest. Why? Because international travel isn't really a thing. There's more domestic travel going on, if anything. Southwest has the lowest break-even load factor. They also have the best balance sheet out of all of them. So if you're going to get into something, you feel like it's going to be a buy as far as airlines are concerned, Southwest. But just understand that I don't think it's time yet to really kind of be that bullish on airlines in general.
Oliver Thorpe, great show, guys. Loving your work. Joining from the UK. Super late night here, but worth it. What do you guys think about Slack? Ticker WORK. Is it a good investment for a longer term play, 1 to 2 years?
So thanks for staying up with us, bro. We appreciate it. I know we got people from all over the globe, and if it's a weird hour for you, we can't stress enough how much we actually appreciate you taking the time out of whatever crazy schedule you might have to hang out with us. But as far as work is concerned, I think that Slack, I've always said that I think the technology is definitely there to be a good long-term investment. But the problem is, and Fat Man Zoom's been pointing this out too, is that they've been really having a tough time trying to monetize this. Their earnings, this should have been a time for Slack to really kind of knock it out of the park, and they just really have under-delivered and been really, really underwhelming. So it's a really big disappointment from them. For the next 1 to 2 years, it would be tough for me to say that, yes, I'm super bullish on them, unless they somehow figure out how to make money off of their product.
Mm-hmm. Agreed. So last but certainly not least, the cheesecloth condom pick of the week.
I knew you were going to ask me this one, and I was prepared this week. It is Aurora Cannabis. This stock went up 300%, 200%, 200% since before the election. So November 2nd, it was at $3.97. It touched over $12, almost $12 a share on Friday. Listen, guys, they have earnings coming out tomorrow, and it is going to be ugly. They dilute the stock to no end, and you can kind of see this. Look at this daily chart. Look how ugly this thing is. And don't let this fool you, because this was nothing more than a reverse split. So if you look the reason that they continue to do reverse splits on this thing is so that they don't get delisted down to the OTC. Basically, it's an over-the-counter penny stock. They just figured out how to remain on the NASDAQ. They have over $25 million in dilutive debt, meaning that they're going to continue to dump shares into this stock. And don't be surprised if maybe in the upcoming earnings that come out tomorrow, we see some sort of offering. Because while Aurora Cannabis is seeing high amount of revenue, they still have not been able to overcome that debt. And that is what's super dangerous about this one. In my opinion, if you want to get into something that's weed related, CGC is probably the best one out there that I feel most comfortable getting in. And we talked about this. We actually put this in the Chaos Crew watch list virtually all week last week. It went from, and it's not as much of a strong move, but it was a safer move. It went from $14 a share, all the way up to $25 a share almost. And we talked about that from the very bottom of this, that we thought that this was a buy leading into this election. So that's the one that I would rather go with other than Aurora Cannabis, because that is a piece of shit cheesecloth condom stock of the week.
The other option I would give you is actually a crew member recommendation from last week's live stream. Be Kind, who I think may be in the house, recommended IIPR, which is a cannabis REIT. And I've been looking at it. It does look pretty good. Wait for a pullback. It had great earnings. It ran up. Wait for a pullback on it, but that's a good one to keep an eye on. I like it a lot. So that's directly from the crew.
Appreciate it, guys. Yeah, so that one's definitely going to be a good one, especially moving forward as things kind of continue to develop. So,
last thing, but certainly not least, we have some football action. We got Saints Bucks tonight, and we got Patriots and the Jets Monday night.
I feel like it's
Ain't
only
nobody care.
nobody. Is that a primetime reference?
Yeah.
Yeah, I was gonna actually. I feel like you deserve the honors on that Jets Patriots game.
Patriots gonna whoop their ass. I mean, I hate to say it. Patriots gonna whoop that ass. It's gonna be ugly. James White is gonna go off. Cam is gonna have a bounce back game. It's gonna be a bloodbath, bro.
Well, they better, because the Dolphins are ahead of them in the division. The Bills look like a monster team after just whooping up on Seattle today. So yeah, that'll be interesting. I'm sure that they'll probably win. I mean, rumor has it Joe Flacco is about to make an appearance tomorrow again. So that'll be interesting. It'll be a big giant shit show.
Joe. Cool Joe.
Tonight should be the interesting game too, because Tom Brady got his ass handed to him. I think that the Bucks.
You're talking about the first time around.
The first time around, yeah. I think the Bucks take it this time.
Bucks definitely take it. Do we know anything about Michael Thomas? Is he still not playing?
As far as I know, he's not playing. Yeah.
Bucks take it. Tom Brady might have got his ass handed to him, but their team's looking great. They're clicking on a cylinder. AB's entered in the mix. Last time he played with AB, one game, scored a touchdown. No big deal. And listen, their defense is underrated. Ex-Jet, Todd Bowles runs their defense. Bucks definitely win this game. So
they're going to be scary.
Michael Thomas,
they're going to be scary in the playoffs, man.
They are good. They're going to be dangerous. They definitely won't win the Super Bowl.
No,
but I think they're going to make a run, and I think they're going to be the team you don't want to play. So
we shall see. I got a question for you. We're halfway through the season. Who you got in the Super Bowl halfway through the season now? Because I got to change mine, because I said Dallas was going to be in the Super Bowl.
Who'd you have? Dallas and who? The Ravens?
Yeah.
Dallas and the Ravens. Damn. Honestly, I would. That's going to be tough. I would have taken Packers, but I don't think they did enough. I really want to.
I was going to go Packers.
I'll say Seattle, Kansas City.
Ooh, yeah. I was going to go Packers, Kansas City, which is what I called last year. So maybe it happens this year. I mean, I hope that the Ravens go, but
I do want the Pack. I want A-Rod to win another one. Yeah, I really like A-Rod.
I do too.
I don't need the Chiefs to win another one, but we'll see what happens.
Yeah. I was thinking Steelers until I watched them almost lose today. Did they still end up losing? I didn't catch the last 2 minutes, but
no, not sure. But yeah, they do look good. But yeah, I agree with you. I don't think Ben's going to get hurt. Big Ben's going to get hurt.
He got hurt today. They took him out early in the half.
That Claypool boy, he looks good.
They got some wide receivers, but anyways, guys, that's our thoughts as far as football is concerned. That's the show. We hope you guys enjoyed it. Give us a like. By the way, we're up over 300, so I guess we're going live tomorrow.
We go live.
We're going to go live tomorrow for earnings. Are we doing 2:00?
Yeah, we'll see. We'll be live, people.
We'll go live tomorrow at some point. Hey,
yeah, we'll do 2:00 because it's the first day after Biden. We'll do 2:00.
All right. I was going to say you could just hit the notification bell either way. But anyways, guys, thanks so much for tuning in. If you want to be part of the Chaos Crew and get our daily watch list as well as access to our public portfolio via Webull. Make sure you're hitting the join button next to subscribe, or there's also a link in the description. We would love to have you guys over there. It's $4.99 a month. You get huge value out of it, but it also helps support the channel. We certainly would appreciate it. Thanks to guys for hanging out. As always, we'll see you all before the bell. Fat Man Zoom.
You've lost that love and feeling. Sing it with me, people.
Oh, my
that
God.